Good morning, crypto world, and welcome back to the Daily Market Podcast. It is Sunday, July 6, 2025. I'm Murph, and as always, I'm joined by the man who crunches the numbers so we don't have to, Cooper. Cooper, what a strange weekend. It feels like the entire market is holding its breath. We had that big macro data drop on Friday, and yet here we are, kind of treading water.
Morning, Murph. Holding its breath is the perfect way to describe it. There's a palpable sense of indecision across the board. The market is processing conflicting signals, and that's leading to this very tight, sideways price action. It's a classic standoff between bulls, bears, and the macroeconomic environment.
A standoff is right. Let's get right to it then, lay out the battlefield for everyone. What are the key prices we're looking at this morning?
Let's do it. As of right now, Bitcoin is trading at $108,200. It's been dancing around this level for a bit, trying to build momentum, but consistently failing to break higher.
So close, yet so far from that $110,000 psychological barrier. It feels like we've been knocking on that door for weeks. Every time we get close, someone or something sounds a chat. It's frustrating to watch.
It is, and we'll get into the specifics of Asterisk while Asterisk is slamming at chat in a moment. Elsewhere, the picture is similar. Ethereum is currently at $2,514. It's really struggling to find its own path and is largely following Bitcoin's lead.
2,500 for ETH. Well, with all the development and activity on the network, that price feels suppressed. It's like it's being held down by this broader market malaise. What about the other big names? Solana and XRP?
Solana is changing hands at $147. It's holding up relatively well compared to its recent highs, but it's still caught in the same consolidation pattern. And XRP is at $2.21, really just moving within its own established range, almost indifferent to the wider market movements.
Okay, so a very flat, very neutral landscape. Which, I suppose, aligns perfectly with the official market sentiment reading you shared with me. We're officially in neutral territory. It's not fear, it's not greed, it's just a collective shrug.
Exactly. The Crypto Fear and Greed Index is hovering right around the 50 mark, indicating pure neutrality. Traders aren't willing to bet heavily in either direction. And the reason for that is the huge macro event from Friday, the non-farm payrolls report.
Right. The NFP data. I was expecting fireworks from that. It came in much stronger than anyone anticipated. More jobs created and employment staying though. On the surface, that sounds like fantastic news for the economy. But in the weird, upside-down world of financial markets in 2025, good news is bad news, right?
Precisely. For the past several months, the market narrative has been built around the expectation of the Federal Reserve cutting interest rates. The logic was that a slowing economy would force the Fed's hand to stimulate growth with cheaper money. Cheaper money, in turn, is rocket fuel for risk assets like cryptocurrencies.
So everyone was betting on a bad jobs report to get the party started?
Correct. They were front-running the Fed, but this stronger than expected NFP data throws a wrench in those plans. It tells the Fed, hey, the economy is actually quite resilient. Maybe you don't need to cut rates just yet. As a result, expectations for a rate cut in the near future have softened considerably. The immediate risk of a recession has been reduced, which is great for Main Street, but it removes the primary catalyst that market participants were counting on.
So the easy money train is delayed, and crypto markets are pouting about it. It makes sense. Without the tailwind of expected liquidity, there's less incentive to push prices into new highs, especially when we're already at such elevated levels for Bitcoin.
That's the crux of it. This macro development has created a significant headwind. It forces a repricing of risk and a re-evaluation of the immediate future. This is why we're seeing this pause. The market is digesting the fact that the path forward might not be as straightforward as it seemed a week ago. And before we go any further, it's a good time for our usual reminder this conversation is for informational and entertainment purposes only. Nothing we say constitutes financial advice. Please always do your own extensive research before making any investment decisions.
Absolutely. We're just two guys talking through the charts and the news. Okay, so with that disclaimer out of the way, let's get technical, Cooper. You mentioned something was slamming the door shut on Bitcoin every time it nears that $110 mark. The macro news explains the lack of fuel, but this feels like an active defense of a level. What are you seeing on chain?
This is where it gets really interesting, Murph. The technicals are mirroring the macro story perfectly. That $109,000 to $110,000 zone is not just a psychological number, it's a massive wall of sell orders. On-chain analysis shows a very clear pattern of large, long-term hold-to wallets, what we call whales, distributing their coins every single time we test the resistance.
So the big money is selling into strength. They're not waiting for a new all-time high, they're content to take profits right here, right now. Why? Do they know something we don't?
It's less about them knowing a secret and more about risk management and cycle awareness. Think about it. Many of these wallets have been accumulating Bitcoin at much lower prices. For them, a price over $100 represents a substantial profit. They seem to be betting that the risk of a short-term pullback, given the new macro uncertainty, is higher than the reward of breaking out immediately. So, they sell, applying downward pressure on the price.
And it creates a self-fulfilling prophecy. Retail traders see the price get rejected at $110, they get spooked, they sell, and the price falls back. The whales can then potentially buy back the coins at a lower price, say around $100 or $105, and repeat the process.
You've nailed it. It's a classic distribution pattern within a range. And what's particularly noteworthy is that this behavior is almost identical to a pattern we observed last year during a similar consolidation phase. The market shot sideways for several weeks with whales selling the top of the range and buying the bottom before we eventually got the catalyst needed for the next major leg up.
History doesn't repeat, but it often rhymes. So, we're stuck in this whale game until something breaks the stalemate. Either the buyers overwhelm the sellers with sheer force, or a new catalyst emerges that makes those whales think twice about selling.
That's the forward-looking statement right there. The market is in desperate need of a new narrative. The imminent rate cut narrative is on hold. So, what's next? Will it be a major spot ETF development in another country? A groundbreaking tech upgrade? A massive institutional adoption announcement? Without that, we could very well be trading in this $10,000 range for a while.
Let's bring it back to the alts then. If Bitcoin is stuck in the mud, what hope do they have? Ethereum at $25 seems to be suffering the most. The ETH/BTC ratio must look pretty grim.
It does. The ETH/BTC ratio has been bleeding, indicating that Ethereum is underperforming Bitcoin in this current environment. For ETH to truly shine, it either needs a powerful Ethereum-specific catalyst, or it needs Bitcoin to break out of this range and lead the market higher with conviction. In a neutral, uncertain market, capital tends to consolidate into the safest asset in the crypto space, which is Bitcoin. Money flows out of ETH and other alts and into BTC as a safe haven.
A flight to safety even within crypto. And Solana at $147. It had such an incredible run. Is this just a necessary cool-down period? What are the key levels you're watching for it?
For Solana, this looks like healthy consolidation for now. The momentum is certainly cooled, but it hasn't broken down. The critical support level to watch is around the $130 to $135 area. As long as it holds above that, the bullish market structure remains intact. It's building a base. However, if Bitcoin were to take a nosedive and break below $100, it's highly unlikely that as well support would hold. It would almost certainly be dragged down with the rest of the market.
The king dictates the terms. And finally, XRP at $2.21. It feels like a broken record with this one, but it's still all about the regulatory story, isn't it?
It is. XRP is in its own unique position. Its price action is less correlated with these macro themes of rate cuts and more with its long-standing legal battles and developments in cross-border payment partnerships. The price reflects that. There's a ceiling on its potential until the remaining regulatory clouds are completely cleared in the US. Until then, it will likely continue to trade based on its own news cycle, which makes it a very different type of investment compared to BTC or ETH at the moment.
So to summarize for everyone listening, Bitcoin is in a tense standoff at a key resistance level of $110, pinned down by whale selling and a macro environment that's suddenly less friendly. This has put the entire market, including Ethereum, Solana, and XRP, into a neutral holding pattern. The name of the game right now seems to be patience.
Patience is paramount. This isn't necessarily a bearish signal, but it's a signal to be cautious. For traders, this range-bound action can be profitable if played correctly. For long-term investors, this could be viewed as an extended accumulation opportunity. The key is to watch the key levels we discussed. A decisive close for Bitcoin above $110,000 would invalidate the short-term bearish pressure and could signal the start of the next rally. Conversely, a break below 100,000 could signal a deeper correction is on the cards.
Excellent breakdown, Cooper. So we watch, we wait, and we see which side flinches first. Thanks for clearing the fog.
Anytime, Murph. It's a fascinating time in the market, even when it's moving sideways. There's always a story in the data.
That there is. And that's our story for today, folks. Thanks for tuning into the Daily Market Podcast. We'll be back tomorrow to see if this standoff has been broken. Stay smart and stay safe out there.